What the heck is happening, you guys? We just saw the first defensive day for stocks in quite some time, with XLU and XLP doing better than all other sectors. I think it's time to pack it all up and go home. No, don't do that. It was just a busy, news-laden weekend with the BBB, the Big Beautiful Bill, passing right before the July 4th holiday here in the US. Then we had Elon Musk launching his own political party over the weekend. Old Bitcoin wallets were waking up just to shake things up a little bit. And then the rekindling of tariff-related tensions came today. Still, considering all that transpired, the market reaction was fairly muted. But don't get put on autopilot by all this dip buying and these muted reactions we've had to very big news events in the market. Eventually, we will get a meaningful correction, and we need to be ready for that. The good news is that history gives us a pretty clear guide of how deep that correction will be based on previous V-shaped recoveries. So join me as we look at the week ahead for stocks, commodities, and crypto. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist. My name is Tom, and I hope you all had a lovely holiday weekend. Before we dive in, if you do find value in the content, please like, comment, or subscribe below. It truly does help the channel and gets this out there to more people. Now, it's already 9:30 p.m. where I am, and this probably won't get published until 2 a.m. So I'm just saying that to let you know that today I'm going to follow suit with Thursday's video and take a more conversational, unscripted approach to get through this just a little bit faster. However, I want this content to really serve you guys well, so let me know in the comments after you've watched this if you prefer the more traditional scripted approach that I've done with the majority of the content since the inception of this channel, or if you prefer this more conversational tone. Also, I'm toying around with the idea of launching a Patreon to help fund the creation of more content. Now, I love doing this and I don't need to make anything for my time, but it is hard to fit everything in a day between trading, and today was a crazy day. Not every day am I trading this much, but with the volatility in certain assets, I was literally trading from 6 a.m. to 1 p.m. Took a little break to walk the dogs and have a snack. Then I had some coaching sessions. I have family. I'm running my business. I'm trying to get in some time for fitness too. Anyway, and now in the evening I'm recording, and it's a lot to fit in, and I have to edit after this. What the Patreon would do is it would at least fund bringing on an editor so I can post more regularly, and it can take some of that time-intensive work off of my shoulders of editing this content. And for anyone that supports the Patreon, I'll share daily market updates, chart analysis, trade alerts, strategy-related content, and I'll also do a weekly live stream on Sunday evenings just for members where we go over market prep for the week ahead and have a live Q&A session. So if that sounds like something that may be of interest to you, let me know in the comments below, because I'm still just toying around with the idea. But if there is interest, it is something that I would pursue to be able to produce more of this content. And aside from the Patreon stuff, it would just allow me to record a little bit more regularly throughout the week as well. So let's dive into the macro. I think the first thing to discuss is the BBB, the Big Beautiful Bill. As you know, I have been critiquing it and its spending increases for quite some time. I think we have a major budget problem here in the US, but I did some light reading over the weekend to go through it all while you guys were barbecuing. Thank you, ChatGPT, for the help. And I really dissected it. And some of the things are not quite as bad as I thought they would be when it's put in context. Now, I think it's important for us to remember that this is Trump's first passed bill in 6 months in office, which makes it more permanent than the executive orders that his administration has been riding on thus far. Now, on the tax cut front, over 90% of the tax cuts in the bill are just getting renewed and have been in place since 2017. So that isn't too meaningful a shift from what we've had in place thus far. Also, as bloated as the bill may be, if we frame up the good, it does give at companies C-suite teams a framework now to start making decisions. And both businesses and markets like more certainty, and they haven't had that, so this should be good for the underlying economy. It's also heavily front-loaded to attempt to stimulate GDP, and when analyzing tariff-related revenue that's coming in, which isn't factored into a lot of calculations, that was almost $40 billion just last month alone. That would roughly offset the spending in this bill if tariffs sustain at the current levels, and I suspect they might actually increase. There's a lot more that can be said about this bill, but the TLDR for us as investors is that it's most likely going to be positive for markets. Also, if you have kids, look into the new deductions for investment accounts for your children. In addition to the $1K from the government, you can deduct up to $5,000 a year for funds going into an approved account account for your kids, it's kind of like an onset IRA. And because it feels like we can't get a moment to breathe in 2025, tariffs came roaring back into the picture today, with Trump sending out special tariff letters to 14 countries. The new tariffs ranged from 24 to 40% and now go into effect August 1st. These nations were the first on what the president promised would be a flurry of unilateral warnings and trade deals, and this comes just 2 days ahead of the July 9th deadline. So at least we can take that off our list of things to worry about this week. I don't know. But apparently more letters are slated to be coming shortly. There was also a threat made that if any countries would retaliate with an increase of tariffs, that we would put even higher tariffs on them. So now I guess we can relax a little bit more come Wednesday, which was the initial deadline. And if we're taking the glass half full view, it would be that while markets were a little bit more defensive today, they didn't sell off nearly as much as they had on previous tariff increase announcements. Still, defensive sectors, like I mentioned in the intro, XLU and XLP did outperform, but hot sectors like fintech, AI, and crypto actually had fairly neutral to positive days. Some standout examples would be ASST, which alone was up as much as 140% before trading was halted on that name. And we'll definitely talk about that one as we review the charts, because I was trading options on that one all day. And I want to go through a play-by-play from my entry last week, why we spotted that, and I didn't anticipate they would run up quite this quickly, but how I played the day to make the most of that. I think the broader learning right now is that we just need to focus our investing on the right names and the right sectors, because while we have had a V-shaped recovery and quite the rally, it's come on the back of just a few select names. And so we want to focus on the sectors that are disrupting, like AI, crypto, fintech. Those are definitely hot sectors right now, as well as some of the tech names. And the key focus within those is really founder-led businesses. You'll see that founder-led businesses in market periods like this really tend to outperform. And I think we see that with names like Hood, Coin, Meta, Circle. I'm sure you can think of others, but the founder-led businesses, assuming it's a good founder, are really tending to outperform. But the sector that's outperforming that we need to be a bit weary of are Bitcoin and crypto treasury plays. Now, I put together a list over the weekend of all the companies I could find, and I found 130 names that are now running Bitcoin treasury plays akin to MicroStrategy. And these entities are already locking up as much as 3%, maybe a little bit more of the Bitcoin supply, at least by my calculations. So that means two things. In the near term, supply crunch, i.e. number go up. So that's good. But that's not going to last forever. In the medium to long term, this to me spells the biggest risk for crypto and offers our largest chance for correcting into another bear market. Yes, there are a few solid businesses in that list of 130, but the majority are failing companies that just slap Bitcoin on their balance sheets to quickly increase their share price to double that of their Bitcoin holdings. So I think we can all agree that that's not a winning long-term business strategy. And if a few of these companies go belly up, I worry that it could start a cascade of liquidations. I don't know exactly what the catalyst would be, but it could be an external factor that impacts the price, that has some forced selling, and forced selling spurs on more forced selling. You know how the story goes. It's as old as time, but it's something we need to watch out for. However, in the near term, they are volatile. They can be quite lucrative. Trade them as you will until the music stops. Just realize that even day trading these names is risky, and not all of these 130 treasury plays are created equally. So with that warning, let's dive into the charts. Okay, we are here starting on S&P 500 on the weekly, and what is this? There are no more horizontal lines. Yeah, I cleaned up the so you can see the price action a little bit better, and you guys thought I didn't care. Of course I care. So today we had that red day, obviously, that everybody is up in arms about, but we have had this streak of all these weeks up. Of course, we're going to see some red days, and of course, we're going to see some consolidation and an eventual correction. But the reason I'm on the weekly today is I just want to discuss where is that correction most likely going to bounce. And the good thing is we can look to other V-shaped recoveries in recent history to give us a guide. So you'll notice I have a new trend line here. This is the 20-week moving average in pink. And if we go back to, let's say, the big V-shaped recovery of COVID, well, when you have that V-shaped recovery and then price action continues on up, our first correction generally bounces off that 20-week moving average. Let's look at some other examples. Here we have this correction in fall of 23 and came back to eventually test the 20-week moving average. Here we have the yen carry low, another V-shaped recovery, come back to test the 20-week moving average. So when we have our eventual correction, that 20-week moving average is a great target for you and a wonderful zone to start planning some dip buying. Right now, that's sitting just below 5,800. Obviously, that will be higher if that happens down the line. But right now, we have a ton of support, as we've been discussing, right at that 5,800 level, with all these moving averages converging right there. So if there was some kind of emergency out there, I imagine we would find fairly strong support on that zone. And I'm going to skip the NASDAQ today because the chart is very similar. Okay, so we are here, Bitcoin on the weekly chart, and the thing I wanted to mention is that we just had our highest ever, just barely, weekly candle close. So this is a good sign of strength for Bitcoin. We are still above that 62 level on the weekly RSI that we want to sustain above. With the pullback we're seeing right now, we're flirting with it again. So I'm just keeping my eye on this one on each weekly candle close until we can get comfortably away from that level, which would be indicating that we are going to move into our next leg up in the bull run. If we go into the daily, we had a daily candle close below that 108,500 critical level there. It's not the end of the world, but we are a little bit weak right now, and there is a lot of long liquidity sitting right down here. So I wouldn't be surprised to see us gap all the way down to, say, the 106,200. Ideally, we support at that 50%, and anywhere down to there would be an acceptable pullback to me before seeing a bounce away. And I would just love to see another strong weekly candle close. This last one I would have loved to see above 110K to have us testing all-time highs sooner than later, but you don't always get what you wish for. So we're just going to have to see what this can do. But overall, if we're just looking at the daily pattern, we have still from that recovery been making a higher low. And now if we bounce off that 50%, we'd be making another higher low, and then hopefully we can bounce away from there. So we just need to see what the next few days bring for Bitcoin, but I'm still positive for the momentum in this space right now. Our volume has been very low. And if any of you have taken my TA classes where I talk about volume being low or decreasing, meaning that a rally isn't sustainable, don't worry about that as much in a sideways consolidation. That applies more to uptrends. Let me just make this full screen. That volume applies to uptrends like this, whereas now we're in sideways consolidation. So it's normal to anticipate lower volume. And then if we start seeing volume tick up, which look how low it is right here, that can just be a leading indicator of some momentum coming back into the space. And that would most likely coincide to an area where we would start to see a breakout, just like we see a volume cluster here, and then big volume clusters here at the bottom where there are other turnarounds. Okay, one last thing I have to mention on Bitcoin, just because CTO Larson mentioned this on DCA Live this morning. He said, oh, Bitcoin could be forming a giant inverse head and shoulders pattern. Well, traditionally, inverse head and shoulders patterns aren't continuation patterns. They happen at the bottoms of swings, just like head and shoulders patterns happen at the top of swings. And also, what if you're measuring your neckline like this, and this is your shoulder, this is your head, we would have to come up here and then form the other shoulder. The head is not big enough in comparison to the shoulder. The shoulder is far too large. And whenever it's nuanced, these can sometimes form in an uptrend as a continuation pattern, but it's not normally between parabolic moves. It's a bit nuanced. It can be a continuation pattern if you are in an uptrend, and then you have a more shallow horizontal pattern like this that then breaks out and continues to the upside. That you can count as an inverse head and shoulders in an uptrend. But this right here is not a textbook example of an inverse head and shoulders or something I would even warrant having on radar. So just my 2 cents there. Looking at Solana, which is in a similar position to Bitcoin in its recovery right now, we are just tightening in this wedge pattern right here. So we need to see which way this breaks. Right now, the bottom end is holding for support, but we do have a fair amount of liquidity down below in the low 140s. So perhaps we dip down with Bitcoin to test this 50% right here, then bounce away to the upside. That would be the ideal scenario, or we just break right through to the upside. But we have yet to see real demand come through from the ETFs for Solana. We have also the 200-day moving average overhead now at 165, which coincides with this yellow trend line, which goes back to the beginning of the bull market. Look back to other videos for that, but that provided underside support. Now it's provided overside resistance, as we saw by this rejection here. So that's our major hurdle overhead. But the one thing that's good about Solana right now, if we look at the Bitcoin Solana pair chart, we broke down from this uptrend about a week ago, maybe a little bit more, And now we tested that for resistance and we just started moving away. So it's early days, but there is subtle strength shifting into Solana. I mean, we're kind of moving on. So the price action is a bit even, but keep your eyes on this chart. If this starts to break down, that means there's more strength in Solana. And I have a little portion of my holdings that I shift back and forth between Bitcoin and Solana. And so when Solana is weak, I move it into Bitcoin. And when Solana is outperforming, I move that Bitcoin back into Solana to maximize on those gains. So just like we pair trade MicroStrategy and Tesla, this is another one that you can keep on your radar just to grow those bags as efficiently as possible. If we move on to MicroStrategy, it's been fairly steady, though we had a little bit of a pullback to end the day here. If I'm just looking at the confluence model on the daily, we are getting right into support and we've been riding this other upper support band. I'm still anticipating that we are going to test this neckline here, and a break through that would then validate this cup and handle pattern. And as we said at the end of last week, our target for that is that $620 range. Moving on to Tesla, and I just turned off the confluence model to help us see everything a little bit better. You can see we are still in the middle of this wedge pattern tightening up despite the pullback and the bad news. I redrew this slightly from this low to now our current low. So I'm assuming this is a bouncing point until proven otherwise. And from the 4-hour time frame on down, our mean reversion is oversold. Our RSI is at the bottom of the range. So it would make sense that we would see a bounce here. And then if we do see a bounce, we're anticipating at least a move up to the top of this wedge. We just really need to see how things settle out for Tesla. It is very much consolidating here around the 200-day moving average. The one, I guess, point of concern for Tesla for me, if we go out to the weekly here, I would really like to see us bounce up from this point soon. If we don't bounce up, I would be concerned that we would be setting a weekly lower high, and then we might come down and correct a bit more. And then I would be eyeing this trend line that has provided us support from the underside since March of 2020. I hope that's not going to be the case and that we bounce to form a higher high and continue this recovery upward. But if we can't bounce away from this zone, we definitely have to keep our mind open for those downside targets. Going quickly to the pair trade, it started moving slightly in the favor of Tesla this afternoon, with MicroStrategy retracing into the day and Tesla recovering by a few dollars from its weekend pullback. It's still too early to call at this point, but we do have a sell signal, and it's just something to keep your eye on to see if it is going to make sense to swap back to Tesla eventually. Really hard to say right now because Tesla could bounce and could recover, and MicroStrategy could also move if Bitcoin starts to have a breakout. So we just need to take this a day at a time. And I have my alert set for the trend flip. I have my alert set for RSI going above 77 and below 22 on this one, and for my mean reversion dots. And I check this one every morning. So if you can, do the same to stay on top of the pair trade. Okay, getting into our fintech section. So Coinbase, that top, the price target we said hit, and this is just consolidating. I anticipate a bit of consolidation to continue. The same is true for Hood. If we go over to that chart, Hood is doing the same thing. But the one I want to bring up that is interesting is Webull, which is offering a similar platform to Robinhood. And I actually made fun of this one after its IPO. It made the dumb chart of the week segment with this run up to 88, and then the crash way back down to 12, and then eventually to 965, where it found its floor. This was just way overhyped at the IPO, so reason you need to be careful. But now it is a bit interesting because it has found a clear value zone in that $9 range. And we started forming our first higher low, and now we have a higher high on a pullback on some news of dilution today. They are raising funds to pursue new business ventures to try to be more competitive. So on this pullback today, because we had that gap down and we were into the most traded zone, I actually entered a position on this assuming that we are going to form another higher low right here. And the narrative, I suppose, would be that while it's lagging Hood and other plays like that, that it would catch some momentum from those other players in the space. And I'm not expecting this to go back to $88. But in terms of just a trade, where if you got in today and I got in pretty darn near the low, which incidentally met up right with this previous peak or just above it for a bounce. So a great technical zone. You also have your invalidation of a breakdown there. If you break down, you know you might be incorrect. The most downside you would have is to that $9.70, $10 range right down here. So it's a fairly low risk to high reward play. I realize from $12, it's still, potentially 30% to the downside, but there really could be a lot of juice in this if you play it appropriately. Okay, if we go into HIMS, I'm just in on the 4 hour here so we can see the nuance of the price action. So I know a lot of you got in down here off these lows, and just going back to Fibonacci levels, we have our 50%, we have our 618, our 382 on either end here, and you can see how those provide support for the bounce, and then we came up, resistance from the other end, and now we bounced from the 50% today. So I had entered a little bit here, and I wanted to grow my position a little bit, and I bought again as we were into the 50% today. So if you didn't catch it this weekend, on Sunday I posted a video on the fib retracement tool and how to apply that from swing lows to swing highs, but it can be very helpful on your charts for mapping out these entries, particularly on the smaller time frames. And right now, we would be anticipating, if this does bounce, that we would get resistance around that $56 range. The one thing I'm watching out for, this play has a lot of momentum behind it, right? But oftentimes when you get these huge gap down drops and the initial bounce, some of these can form a lower low before eventually bouncing. And I would be looking to that 200-day moving average for support, hence why I have that alert here. I might have to move it up a little bit depending on what happens over time. So actually, let's do that now just to give us a little bit of wiggle room so we get that alert early. I'm not saying that's going to happen. And if that were to happen, it would have to be one other piece of negative news that comes out for this company. I, again, don't know what that would be, but because there was already a bit of negative sentiment with that Wegovy deal falling through, one more bit of bad news could push this down to unreasonable values, considering how little impact that Wegovy deal had on their overall revenue. Okay, moving on to some of the Bitcoin Treasury plays, because a lot of the other stocks we're watching haven't done much since last week. But one I'm watching right now and that I'm in is KNW. So KNW is a Treasury play. I got in at about 88 cents down here, rode it up, sold most of my shares outside of I left 1,000 sitting on the table just to watch it. And now it found this value zone right here, which corresponds to these previous candle highs. And that was at $1.57 last week. So I added back to my position once we got these 3 4-hour candles in a row forming a clear base. We've bounced away from that. And today we rejected from the 50%. So just another example of how these levels can provide support and resistance. Even here on the 382, you can see how that provides support, 50% resistance, broke through, underside resistance, so on and so forth. Story as old as time. Anyway, I'm watching this now because if we break through that 50% level, we'll probably find a little bit of resistance here at 370. And then we've got a fair amount of room to run to the upside. If we can get through the 50% as hurdle 1 and then 370, the volume drops off and we could run to this 200-day moving average quite easily. So if you're not in this one right now and you're looking to get into a position, watch the 50% break. And then if we have a retest of that for support before bouncing away, that right there, I love those kinds of plays because you get in at support. You can set your stop order right underneath, which you want to do with a volatile name like this. And then you can just ride it for that last little bit. Or if you want to amplify the play, you can look for options instead of buying spot. Naka or Kindly MD, which we discussed last week, continues to break down, so I would tread with caution around this one. The downside target is all the way down here at the moving average, actually just above this volume cluster at like $3.60. You could argue that this is a bit of a falling wedge or descending channel, which generally breaks to the upside. So watch this, because targets don't always hit from these wedges. And if this acts anything like ASST did today, if this is a descending channel or falling wedge, when this does break to the upside, that could be quite explosive. So I bring this up for two reasons. Be careful if you're in it, because it has a target way down here from the pattern, but also watch this channel. If we see a daily candle close above this and you start seeing volume picking up, which volume has been very low on this, that could be the sign of a move coming that could spur on a short squeeze like we saw today in ASST. So this is definitely one to keep on your radar. DFDV, really nothing has changed on this one since our analysis from last week. Obviously, we have the 50% overhead. We bounced from this underside support line that has been very solid for us. So I like these kinds of underside support lines with multiple points of confirmation, because if we come back into this and it breaks down, you know something has changed and you watch out for lower targets. And right now, I'm just anticipating that we're going to bounce to that 3650 level before correcting, and then hopefully testing the 50% or just above there for support before bouncing away. And I'm getting that 3650 just by measuring this last bounce up and projecting that. And this line, actually, this line that we drew that last week before I did a measured move target. I was just like, oh, if the price action gets above the 50%, this would be the most likely path. So I'm just going to keep that transparent yellow line on there to see how closely this price action follows the ideal scenario, just from looking at the chart and what I would like to see happen. Okay, and then last one we obviously have to talk about, because it just went crazy today, is ASST. And we've been covering this one for a while, all these different explosive moves and how we've played them and this descending wedge. And this one was one where I actually had lower price targets for this pullback. We didn't quite get there. My first one was at $3.40 right here at this volume cluster. And then the ultimate price target, if it just the floor dropped out, was at $2.53. So we didn't get that. But what we did get last week, which gave us a lead that this was breaking out, was just this consolidation zone. And we talked about this line being drawn and then how we moved away from it and then retested it for support. And I talked about how I got back in with some options and bought some more spot right there. And now I didn't know that today the move would be this explosive, but I think there were just a lot of folks that were aggressively short on this. And when that happens, often you can get a short squeeze. And as I was watching this morning, the other thing that teed me off, in the pre-market action, we had this spike before the markets opened. And when you see something like that in the pre-market and then selling kick in, it just gets your attention that something is brewing. And we also had this big volume candle. So I was on alert for this one to start the day. And then after an initial morning dip, we just started moving. And the momentum kept, let me go into like the 15 minutes so we can see this a little bit more. And the momentum just kept building and building, and the volume was also increasing on that. And as soon as we got to this previous spike, this was my first sell, because that was my minimum target. And I had thousands of shares of this, and I just sold my first 500 shares there. And then I sold another 500 once we got to the 50%. And once we broke through the 50%, which I honestly thought we would reject from this, and we were getting into this high volume cluster, but we just kept pushing through. And then in each point of resistance where we got a little bit of a pullback and then came back up to test the level, I started unloading a little bit, and then I started selling my options, because my options from last week were up at the top here over 350%. And what my strategy was with options, because it was hard to get them filled, what I would do is I would actually set my price for the options higher than the current bid-ask spread. And then as the price continued to increase in value, my options orders were getting triggered for those sells on the way up. And I got really lucky. I got my last sale in when we were at $10.20. Where were we? Did I nail the top? Oh, I almost did. I got my last spot sale and my last options order filled at $10.20 right before trading halted. And that was just luck of the draw, really. But I saw that we were getting to the top of our range, generally speaking, and I didn't have much left. Then trading halted, and that really put a damper on the price action. And I started the day with thousands of shares and tons of synthetic long call options. And I ended the day with no more options and only 500 shares left. So this one was a meaningful trade for me today. Sometimes when we talk about trading, we have a day maker, like, oh, this one trade made my day, or a week maker. This one, for me, was a several month maker just off this one trade. And they normally don't happen this fast. But when you start seeing signs like we talked about last week with something shifting after all that downward momentum, I didn't know this would play out right away. I was ready to hold those, synthetic longs for several weeks or a couple months. I'm like, of course, this is going to go back up eventually, especially if we're still getting into the bull run. But anyway, didn't anticipate it would play out that quickly. But the thing to mention, and I think the thing to take away, is you need to be ready and on alert for when these things happen, because there was not much time to take advantage of this. And remember, when you're going to a parabolic run like this and you're selling your options, set the price a bit higher and let the price action come to you to get the best possible exit on those options. So that's it for the charts. While there was defensiveness out there today, I think overall things are still looking positive. As the old saying goes, the trend is your friend until the end, when it bends and then it crashes down, and then you cry because you're no longer rich on paper and you have to sell your Rolex and that car you can't afford. And I don't think the saying is actually that long. Anyway, the trend is your friend is the point. So stick with flows, stick with what the market's doing. If we're looking to the week ahead and what we have to watch out for things that might move the market, we have the 10-year note auction on Wednesday, Fed meeting minutes on Wednesday as well. On Thursday, we have initial jobless claims data. And then on Thursday, we also have the US 30-year bond auction, and then the IEA monthly report on Friday. So I hope you guys all have a wonderful week. Happy trading out there, and I'll see you all on Friday for the weekly wrap-up. Bye for now.